Dunkin Brands Group, the operator of Dunkin' Donut coffee shops, is going public and is scheduled to price today. Now, the company is planning to raise as much as $401 million by selling 22.3 million shares for $16 to $18 each. Well, Jay Ritter is a finance professor at the University of Florida. He's considered a leading academic authority on IPOs. He's joining us now from Gainesville to offer his assessment of Dunkin' Brands and the IPO market. Excuse me, I'm getting so tongue-tied here, Jay. Overall, I mean, it's a very busy market, Professor Ritter. A lot of people compare it, of course, to back in the good old days, in the tech bubble days, early 90s, late 90s, early 2000. What do you think about those comparisons?
Well, there are some similarities, but the differences are very substantial. 12 years ago, in the tech bubble, the IPO market was dominated by tech stocks, many of which had no more than a business model. This week, we've got an unusually large number of companies going public, but the industries that they represent are spread out all over the map.
Let me ask you this. You've done some interesting studies, and what you found in those studies I think might surprise people. Often we're looking at the company itself and what it does, but where the company comes from has some bearing on performance. For instance, you look at venture capital versus private equity-backed IPOs. How does that impact performance?
Well, for any given company, it's difficult to tell how it's going to perform. But on average, historically, venture capital-backed companies had done better than IPOs. But in the last decade, that pattern has reversed, that venture capital IPOs have underperformed other IPOs this decade. And buyout-backed IPOs in all of the decades have generally done pretty well.
But on the first day of trading, there's an interesting trend there. VC-backed IPOs tend to be up 28.1%, right, on average. On their first day of trading, you're saying longer-term trends, those buyout-backed IPOs do better. And Professor Ritter, we left it off by talking about the $50 million rule. This is one of the rules that you take a look at, which surprised me. On the first day of trading, on average, companies with the $50 million or less in sales tend to do quite well, at least on their first day of trading.
Yes. For just like venture capital versus buyout companies, where the venture capital-backed companies do better on the first day of trading, that tends to reverse a bit in the long run. At least over the last decade, that's been the case. Same thing with companies with less than $50 million or greater than $50 million in annual sales. When they went public, that the smaller companies tend to have the higher first-day run-ups, but in the long run tend to do worse for investors.
And why do you think that's the case, Professor Ritter?
It's really difficult for a company that has not achieved the threshold in the product market of $50 million in annual revenue to ever overcome that. Now, if investors had realized the odds were against them and priced the stock sufficiently low, that would be fine for investors. But too many times investors think that a company where the odds are against it has too good a chance of success.
And then very quickly, we got about 20 seconds here, Professor Ritter. What do you think about Dunkin' Brands going public?
Well, Dunkin' Brands is an interesting situation. Obviously, it's a mature company. This is one of the very few weeks where we've actually got a coffee company and a tea company going public. Dunkin' Brands obviously sells Dunkin' Donuts, but they also sell a lot of coffee. And later this week, Teavana, a tea company, is planning to go public as well.
All right, Professor Ritter, unfortunately, we got to leave it there. We do enjoy your insight. Very interesting studies that you've done. We'd love to have you back on Fast Forward. That was Professor Ritter, Jay Ritter. He's finance professor at the University of Florida. Another company he says you should watch is White Glove House Call Health. That IPO is tomorrow.